गुड इवनिंग एंड वेलकम बैक टू पैसा बोलता है। पैसा बोलता है में फिर से आपका स्वागत है। आज मैं फिर म्यूचुअल फंड्स की बात करूंगा और उनकी एईएम के बारे में बात करूंगा। एईएम माने एसेट अंडर मैनेजमेंट। एसेट अंडर मैनेजमेंट का मतलब ये है कि कितना पैसा पूंजी म्यूचुअल फंड्स में डाला गया है और ये इक्विटी म्यूचुअल फंड्स में कितना पड़ा है। इन सब के बारे में आज मैं विश्लेषण करूंगा। वेलकम बैक टू पैसा बोलता है। टुडे आई वांट टू टॉक अबाउट द एमएफ इंडस्ट्री, especially the equity portion of it. I want to examine what is happening in equity mutual funds, what is the total AUM meaning the asset under management, and what is happening. What is the future for AUMs and what is happening month on month. So first let us look at the headline figures. The headline figure says mutual funds AUM are at an all-time high of 43.2 lakh crores. That is 3.8% more than in May. That means between May and June, the total asset under management has gone up by 3.8%. This could be due to several reasons. One, the price of stocks in June went up and in May and June went up and the index was reaching a new peak. Therefore, the valuation of the stocks could have gone up and therefore the AUM also went up. What we need to look at is actually how much fresh money went into the equity market. There are two types of ways by which subscribers or investors invest in the market. One is they do lump sum investments. Another is systematic investment plan. So the systematic investment plan has been at an all-time high and is continuing to grow steadily. But what has happened is in the month of May, the clients have already started to pull out money. The total amount of money pulled out went up by 36.6% month on month. That is 31,000 crores of money was withdrawn by the investors in the month of May. Why is it so? Because the indices had reached an all-time high. The intelligent customer decided to pull out some profits and book some profits. And since the market was rising, they pulled out the money. In the month of May, from direct equity investments alone, retail investors pulled out 27,569 crores. That is, what has happened is they pulled out 31,100 crores from equity mutual funds and 27,569 crores from direct equity, meaning nearly 58,000 crores was pulled out by equity investors, especially retail, from both mutual funds and direct equity. So this means that customers want the clients or what the investors or clients or retail in trade is pulling out money out of equities. One of the primary reasons for pulling out the equity is simply because the returns have not been great. For the last 2.5 years, the mutual fund industry has not produced great returns because the index is moving only between 16,000 to 18,000 and SEBI by various regulations has cramped the ability of a fund manager to invest. It has broadly defined depending on the quality of the way the fund is structured, it can only invest in that particular area. Only a multi-cap fund can invest in different mid caps and large caps. ETFs have seen a big dip. In the month of April, 6,790 crores flew into exchange traded funds. In the month of May, it was only 4,524 crores. So basically, the exchange traded funds have dropped. SIP continues to grow and it is an all-time high of 14,749 crores. But for this 14,749 crores, you have had a severe problem. And like in any markets which runs away, small caps have outperformed mid caps and large caps. IT has been stagnant, extremely stagnant. Pharma has been decent. It has produced good returns and there is news that it could get only better. The market has been basically driven by FMCG, auto, bank. This is because interest rates were held by RBI at a particular point and therefore the investors felt that the worst of the rate hikes is behind them and therefore banks and autos rallied. And there was also hope that FMCG will do well. The FMCG rally is primarily driven by re-rating of ITC. If you take out the performance of ITC, the overall performance of FMCG will drop. Profit booking has taken place because market is near its all-time high and has been at the same market for the last 1 or 2 years, it's between 18,800 and 16,000. In fact, the 52-week low is 15,183. So the market is now expecting at least a 10 to 15% correction. That is, if the market is today as 18,800, they are expecting it to go to 17,000 or 16,500. If such an event happens, there will be major losses for those who have invested in recent times. This is the reason why people are pulling out money from equity mutual funds and also direct equity. You could see a flight to quality. Stocks like ITC, which were considered staid and boring, are now seeing attraction. More and more money is flowing into these kind of stocks. Also, FMCG stocks owned by MNC companies are also seeing a big remittance of funds, and the prices pushing the price of the FMCG stocks up. Also, banks and auto sector have had major investments. The auto sector recently hit a 52-week high, both in passenger and auto stocks. Eicher, Bajaj, and Tata Motors have been great performers in this period. So, if you are investing in mutual funds, better stick to Nifty or Nifty funds, or you can buy the S&P 500. But it is better. This is a stock pickers market where there is no breakout of prices. It is better to consider out of favor large cap stocks. Thank you for supporting पैसा बोलता है. आप इस पॉडकास्ट को सुने और इसमें प्रस्तुत हुए, इसके लिए मैं आपका आभारी हूँ. आप बेल नोटिफिकेशन दबाएं और मेरे चैनल को सब्सक्राइब भी कीजिए, नहीं तो जब आप नया प्रोग्राम डालेंगे आपको नोटिफिकेशन नहीं आएगा. नमस्कार, धन्यवाद, जय हिंद. Welcome back to Be Rich. I am in Tokyo on work on the 5th of August 2023. I have a lot of following in Japan, Tokyo. Those who want to meet me in Tokyo on 5th August, kindly drop me an email on the address given below or contact us on WhatsApp there. My team would get in touch with you and facilitate the meeting. Once again, I thank you for your support for Be Rich.